If you're currently working a 9 to 5 and you're anything like me, then chances are you don't want to work until you're 60. Retiring early is one of the most common goals people have, but if you're working just a regular job, then how do you achieve this goal? People act like there's only one path to early retirement, but they are absolutely wrong. In this video, I'll show you my exact plan to retire early without inheriting a fortune, working 80-hour weeks, or relying on a ridiculous amount of luck. But before we start, I do want to set some things straight. If you're looking for a get-rich-quick scheme or some type of secret that turns $100 into $1 billion overnight, then this probably isn't the video for you. I'm not a financial advisor. I'm simply sharing the plan that I am following to retire early, because this is the type of video I wish I would have watched when I was trying to figure things out. So if you're still here, let's get into it. The first thing we need to address is that 9 to 5 is somehow a trap. And yes, this can be the case if you wake up every morning absolutely dreading your job. But if you actually somewhat enjoy your job, then a good 9 to 5 can be one of the best financial tools ever. It offers some nice advantages, especially if you're trying to build wealth in the long term. One thing that I really love is stability. Whether I have a bad week or a good week at work, I'm still getting paid. But there are many other benefits. You get access to cheaper healthcare, and in most cases, also retirement contributions from your employer. It offers stability and removes the financial uncertainty that comes with running a business. But now let's get to the real question. How do you turn that steady paycheck from your 9 to 5 into financial freedom? Well, for me, the answer is investing. And no, I'm not talking about putting your hard-earned cash in a savings account that offers at most 2% interest. I'm talking about investing in the stock market. I want you to look at it like this. Instead of trading your time for money forever, you're putting it to work so you can start earning money for you. It's like having a reliable employee that is never sleeping. Now, before we start, I'm really curious. If you've already started investing, feel free to comment down below how old you are and roughly the size of your portfolio. And is it mostly stocks or also real estate? But for those of you that have little to no experience, first, let me show you what is possible. Now, let's go to a site called NerdWallet to create your own early retirement plan. This site works with dollars, but of course if you're from a different country, you can do the same in your currency. Let's say from today on, we start investing about $500 each month. I know that for some people this can be a bit much to start, and for others it's probably too little. I personally started with $100 a month and gradually increased it over time. Now you can do the same, you can start with less or more depending on your situation. Feel free to adjust. I will leave the website in the description so you can do your own calculations. But for this video, I'll take $500 as a reference point, which we will be investing over 30 years at a 10% interest rate. And before you say, what? 10% interest? How am I going to achieve that? Well, historically, the US stock market has averaged around 10% over the long term. This doesn't mean that you will get 10% each year. Sometimes it will be more, sometimes it will be less. Nobody can predict the stock market. So let's say you want to invest into the US stock market. And by the way, I'm not talking about trying to pick the next Apple or Nvidia. We are not gambling here. I'm talking about owning a small piece of hundreds of the biggest companies in America through an ETF. And this isn't just my opinion. There's a lot of research showing that ETFs have historically been one of the most reliable ways for investors to build wealth over the long term. One popular example is VOO. This ETF tracks the 500 biggest companies in the US. So instead of betting on one company, we're investing in the overall growth of the US economy, which offers a lot more diversification. Of course, there are other options. If you don't want to invest in the US stock market only, there are also ETFs that track companies across the entire world, like the FTSE All-World Index, for example. I'll leave a playlist on my channel where you can find some of the ETFs that I would personally invest in. But if you're just starting out, I suggest you only pick one. So, for this simple example, I'll pick VOO, which is the ETF that tracks the S&P 500, which has a 10% average return. And when we look at the graph, you can see this investment plan would leave us with about $1 million. But remember that this is before taxes. So always do your research so you are aware of the tax rates in your country. Also notice that the investment curve is not linear but exponential. At the start, your portfolio will barely grow, but over time it will explode. That is why it's very important to start investing at a young age. But even when you're older, you can still retire a lot more comfortably by investing. It is never too late to start investing. But I'll give an example to demonstrate the power of starting at a young age. Let's say you start investing at 20 years old, just like I did. You're probably going to start with a lower amount, but let's say on average you invest $500 a month for about 35 years. This means that before taxes, your investment will have grown to about $1.7 million. Notice that with only 5 additional years of investing, the portfolio is almost doubled compared to the example we just used with 30 years. Now, if you'd like to know more about investing, or if you simply just like following someone else's investment journey, then I suggest you to subscribe. On this channel, I'll be documenting everything, sharing exactly what I'm investing in, my portfolio results, how I'm investing, and even step-by-step guides for anyone who wants to build wealth the same way. By subscribing, you make sure you don't miss a single video. I hope you got some value from this video, and until next time.